As prices rise and the value of money fluctuates, it's crucial to equip ourselves with effective techniques to safeguard our hard-earned wealth. In today's video, we delve into a topic that affects every wallet: mitigating the impact of inflation on your finances. Get ready to discover actionable ways to combat inflation and protect your financial well-being. To mitigate the impact of inflation on your savings and investments, consider the following strategies. Diversification. Diversify your investment portfolio across different asset classes, like stocks, bonds, real estate, and commodities, to potentially mitigate the impact of inflation on any one particular investment. Let's say you have a portfolio consisting of stocks, bonds, real estate, and commodities. In an inflationary environment, if the stock market experiences a downturn, the value of your stock holdings may decline. However, if you have allocated a portion of your investments to real estate, the increase in property values driven by inflation can help offset the loss in stock values, reducing the overall impact on your portfolio. Equity investments. Historically, equities, stocks, have shown the potential to outpace inflation over the long term. Consider allocating a portion of your investments to stocks, but be aware of the associated risks. Suppose you invest in a diversified portfolio of stocks that have a track record of consistently outperforming inflation over the long term. Over several years, despite inflation eroding the purchasing power of your savings, the growth of your stock investments can potentially outpace inflation and generate substantial returns. Increase income streams. Look for opportunities to increase your income through additional sources. This could include taking on a side hustle, freelancing, or starting a small business. By diversifying your income streams, you can potentially earn more money to combat the effects of inflation on your savings and investments. Inflation-indexed investments. Look for investment options that are specifically designed to provide protection against inflation, such as Treasury inflation-protected securities or inflation-indexed bonds. Imagine you invest in Treasury inflation-protected securities. These bonds are specifically designed to provide protection against inflation. As the inflation rate increases, the principal value of Treasury inflation-protected securities adjusts upward, ensuring that your investment keeps pace with inflation. For example, if you invest $10,000 in Treasury inflation-protected securities with a 2% fixed interest rate and inflation is 3% for the year, the principal value of your investment would increase to $10,300 to account for the inflationary impact. Regular review. Regularly review your investments and ensure they are aligned with your financial goals and the prevailing economic conditions. Adjust your portfolio as needed to account for inflation and changing market dynamics. Let's say you regularly review your investment portfolio and find that your fixed income investments, such as bonds, are not keeping up with inflation. As a result, you decide to rebalance your portfolio by reducing your bond holdings and increasing your allocation to equities, which historically have shown the potential to outpace inflation. By adjusting your portfolio based on the prevailing economic conditions, you aim to maintain or improve your purchasing power over time. Consult a financial advisor. If you're unsure about managing your savings and investments in an inflationary environment, consider consulting with a financial advisor who can provide personalized advice based on your specific circumstances. Suppose you consult a financial advisor who assesses your financial goals, risk tolerance, and the impact of inflation on your savings and investments. Based on their analysis, they recommend a combination of strategies tailored to your situation. They may suggest diversifying your portfolio across asset classes, allocating a percentage to inflation-protected investments, and periodically reviewing and adjusting your investments to account for inflationary pressures. By working with a financial advisor, you can receive personalized guidance to help mitigate the impact of inflation on your finances. Remember, the impact of inflation on your savings and investments can vary depending on factors such as the inflation rate, investment types, and economic conditions. It's essential to stay informed and adapt your financial strategy accordingly. Maintain an emergency fund. Having an emergency fund is essential to protect yourself from unexpected financial challenges. Inflation can lead to rising prices and increased expenses. By maintaining an emergency fund with an adequate amount of savings, you can ensure that you have a cushion to cover any unforeseen expenses that may arise due to inflationary pressures. And that concludes our exploration of the various strategies to mitigate the impact of inflation on your finances. By implementing these approaches, you can better position yourself to combat rising prices and preserve the value of your hard-earned money. Remember, staying proactive and informed is key to maintaining your financial well-being in an ever-changing economic landscape. If you found this video valuable, don't forget to give it a thumbs up, subscribe to our channel for more insightful content, and hit the notification bell to stay updated. As always, we appreciate your support and encourage you to share your thoughts and questions in the comments section below.